Broadcast is now starting. All attendees are in listen-only mode.
Welcome traders to today's presentation on how you can actually dominate the markets with at least 87% winning accuracy. Hi, my name's Michael Guess. I'm the President and CEO of TradeSafe. And I sure would like to welcome you to today's presentation because what I'm going to do is show you how you can replace subjective discretionary trading with a Boolean logic mechanical system that produces actual consistent winning results. But before we get started, I want to make sure that you can see and hear what's going on. So if you would, please look in the top right corner of your main monitor and you'll see the little narrow panel with a few buttons on it. One of the buttons at the very top has a left pointing arrow. If you click once on it, it'll slide that whole thing over to the left and it'll reveal a hidden window to the right. Inside the area to type, please type something and let me know that you can see and hear what I'm doing, and click on that send button. So please give me some feedback. Let me know that you can see and hear what's going on. Hello, hello. All right, there we go. Very delayed response there. Thank you, Mary. Thank you, Pa. I appreciate it. And remember, folks, this is how you get to ask your questions. I know maybe some of you have been here before and you're saying, well, I don't need to participate, but I want you to think about questions that maybe you haven't gotten to ask before, because you can ask questions anytime you want, and I will do everything I can to answer them during the presentation. So let's go ahead and get started. I already told you that this is me. I'm Michael Guess. And I want to thank you for taking time out of your day for being here. And I'm going to lead off by making you three big promises. First of all, that by the end of this presentation, I'm going to show you how you can replace the uncertainty in your trading with real consistency, because that's the true holy grail of trading itself. You know, it's not some kind of rocket science indicator or anything else. We all want consistency. The second promise, I'm going to actually give away free trading tips. I'm actually going to steal directly from the trading system itself and show you some of the settings, some of the actual techniques embedded in the trading system that you can start using on your own and play around with them. And finally, before you leave, I'm going to show you exactly what it takes so that you can become just like a trading machine. You can produce that consistency reliably. Okay? So, what gives me the right to say that? What's my credibility? Well, I've been a professional day trader now for 25 years. And I started TradeSafe about 20 years or so ago. I've graduated more than 4,000 students along the way, and I've created a host of custom indicators, various mechanical trading systems, and I'm going to share the TradeSafe mechanical trading system with you today. But before all this began, in a past life, so to speak, I was a psychotherapist. And really, I was what in my niche was called, in today's parlance, I was a performance coach. That's right. I showed people how to achieve their goals reliably. I wasn't there to fix people. I was there to help people achieve what they wanted. And I take that knowledge into the TradeSafe package, which includes the coaching by yours truly. Okay, now there's more. What else do I have as far as credibility? Well, way back in prehistoric times, we had in the late 90s this thing called the dot-com bubble, and it produced a whole lot of volatility in the market. And right now, that's exactly what we've got. We've got a bubble going on in the market. It keeps climbing and climbing, and from a far off distance, it looks like, oh, it's just going to go to the moon. But when you zoom in and watch the nitty-gritty, you will see a whole lot of problems, intense volatility. So I learned what not to do about that volatility, and I'm going to share some of that with you today. So in addition to that, if we go forward about a decade, we all know what happened during the big recession in 2008 and 2010. the TradeSafe system still kept chugging along and cranking out the profits. It didn't miss a beat. Even though a lot of people went under and suffered greatly, the TradeSafe system kept right on producing profits. And as I said, I showed people how to do this, over 4,000 students along the way. So that's my credibility. There's actually more, but I won't take up more of your time with that. But I want to reassure you, in case some of you have to leave early, this is actually being recorded, and you're going to get an email later on this evening after the video is processed and uploaded into the archives, and it'll have a link to the replay. You'll also get a link to, guess what, how to ask more questions, because nobody's asked any questions so far. I can understand. I haven't actually produced any material to give you something to ask about, but I want you to know that as we go through this presentation, if you think of questions later or you want more detail, you can actually schedule a consultation with me. It'll be a private call on the phone, just you and I, and it will not be a sales call. I don't do that. It will be a candid opportunity for you to get all your questions answered so that when you come away, you'll feel your time was well spent and you can make up your own mind about whether you think TradeSafe is a good fit for you. Okay? Well, before we dive into the actual meat of the content, I want to fulfill the letter of the law, and that is the FTC, that's who runs the internet. They say that no one is allowed to make any kind of guarantee or promise. It has nothing to do with trading. Heck, it could be weight loss, could be anything. But I'm not going to break that law, so I can't promise results because of that. What I will share with you is our actual track record and show you how you can reasonably duplicate that. Okay? We'll get to that much later into the presentation. But also one thing I do want to say, in case some of you are just starting out, you're a beginner, please don't trade with money you can't afford to lose. Always trade with what's called discretionary income. Well, all right, let's go ahead and dive in. I told you at the beginning that this relates to day trading, and I don't want you to bail because maybe you say, oh, I've got a job, or I've heard day trading is this or that. I'm going to make a very strong case for why you really want and need this trading tool in your toolbox, and that it's really easy. Okay? But first, let's look at what most people do. Position trading, that's, where you buy or sell a position in the market, whatever it is, a share of stock, a contract in the options or something else, and you hold it at least overnight. Well, there are some disadvantages to that. First of all, it takes a lot of money to do that. That's called margin. The broker requires you to put up a lot of money to open an account and keep a certain amount of money in that account so that you can participate in this position trading. There's also the issue of delayed feedback, and that is you get into a position, let's say you did today, and tonight you heard some bad news that you think might affect your position. You got to wait till tomorrow to find out if you got knocked out. So that delayed feedback can create some issues. Stress makes it hard to sleep while you're waiting for the next day's open to determine if your position has been affected or not, right? But here's something a lot of you don't much think about: accuracy. And it's real simple. The further out you hope that you're going to stay in your position and have a winning trade, hopefully a very, very profitable trade, well, the odds drop. And conversely, if you bring that time horizon back from months, weeks, or even days and bring it down to something like minutes, then the odds go much more in your favor. And that takes us to day trading. Let's start with that other thing we did before, margin requirements. You do not need tens of thousands of dollars to open up a trading account for position trading, like you do with position trading. If you want to day trade, it's a whole lot less. But I do need to qualify that. If most of you are thinking in terms of trading, you say, well, all there is the stock market. Actually, the universe is so much bigger. You've got the stock market, you've got something called Forex, you have things called futures and commodities, and so forth. Even ETFs are part of the stock market, technically speaking. So the SEC, the government agency that controls and regulates the stock market, they say it takes a minimum of $25,000 for you to open an account and day trade the stock market. So that's a barrier for a lot of you. I want to just spend a minute or two here. I won't take much more than that and point out there are a lot of disadvantages to trying to day trade the stock market. Other than that it takes a lot of money, $25,000. Another big issue is it's dominated by the institutions. They use this thing called algorithmic high frequency programmed trading. In plain English, it simply means they've got these computers that do the trading for them, and they can put on 10,000 positions in a fraction of a second and another fraction of a second, reverse it and go the other way. And that froths and churns the market and really makes it difficult. Plus, their computers are co-located right there, plugged directly into the mainframe at the exchange itself. So they're going to get their orders in way before you do. So the deck is stacked in favor of the institutions if you're going to try to day trade the stock market consistently. So don't worry, I'm going to offer you an alternative here. There are actually several other things that go against the stock market. Taxes, you get beaten up terribly by the Internal Revenue. And also there are some restrictions on being able to sell short. You got to have an uptick rule and so on and so forth. But let's move away from the stock market and go to the next consideration that's an advantage of day trading. And that would be you're in control all the time from the moment you start your trade to the moment your trade ends. Now, with my system, it's automated. Yes, you're in control. You're the person, guy or gal, that gets to pull the trigger on the trade. You decide if you really want to or not. It doesn't do it for you. But once you're in the trade, it is automated, and you'll see how that works when we go to our charts. But here's the thing. Let's suppose something happens. Maybe you got to jump out of the trade for some reason. You can pull the plug because the average day trade only lasts minutes, typically anywhere from a minute or two to an average of 15 or 20 minutes. So this means that you have full control, unlike position trading. And that allows you to sleep peacefully because by the close in the afternoon, you're done. You're not in any positions. Everything you did is finished. But last of all, that thing that most of you don't think about, and I talked about it earlier, accuracy. You get much higher accuracy as a day trader, assuming you have a system with an edge like the TradeSafe system. Our accuracy is extremely high. Our graduates for the past 2.5 years since I've been keeping these stats, their own trading, not me telling them what to do, their own trading, every single graduate from my program achieved at least 87% winners. So if you would like to achieve 87% winners, type yes. Let me know. Give me a little bit of feedback so that I know that you'd be on board with being able to have that kind of assurance that you have something that can win and be a consistent winner. That's what we're looking for. Because if you have this consistency, that means the money that you've worked so hard to trade with, that capital goes further because then you can spread it around. You can trade different kinds of markets. You don't need as much. You can diversify. Now, in spite of all this, I know a lot of you are still believing there's some myths, and I'm going to address those. Here is a big myth that a lot of people assume that, hey, day trading's complicated. Actually, it's not. I taught an 8-year-old kid how to do this. It is not rocket science. What I do in my program, the package that accompanies the software, I don't just sell a piece of software. I want you to be thoroughly trained personally by me, your mentor, your coach, in my coaching room. I call it a coaching room instead of a trading room. And I want to make sure that by the end of the program, you are trained up well enough to be considered a professional day trader. That means we've leveled the playing field. So it's not rocket science. It's really straightforward. Here's another myth. You got to have fast reflexes. You got to shoot anything that moves, kind of like a video game. Well, that might be true in video games if you're 20 years old or something like that, but it's not true with the TradeSafe system. We actually take a much more strategic approach, more like a chess game. With the TradeSafe system, you plan well ahead before you actually get what's called a setup for a trade, and you let the market come to you, and you park your order and let the market put you in the trade. That's sort of like, don't chase the tiger, let the tiger come to you, and you've laid a trap for the tiger. Here's another one. A lot of people assume you got to sit on your butt all day and get hemorrhoids and eye strain. No, you don't. You can actually do what I call part-time day trading. And I actually recommend that. I know some of my graduates, they do like to sit there all day. They don't want to miss anything. But the truth is, you don't have to do that. You can still make a reasonable income by doing part-time trading. Maybe you just want to trade the morning part of the session or just the afternoon. Every day is different. There is no such thing as always the mornings are better than the afternoon or vice versa, okay? But you can be strategic and you can select what works for you. Why is this possible? Because of something called cycles. Now, what the heck is cycles, or what are they rather? Pardon me. Well, as I said, cycles make it possible for you to not have to sit there in front of your screen. First of all, it's not healthy. Sitting is the new smoking. You really need to get up about every 20 or 30 minutes. That's what's recommended so you don't get brain fog at the very least. But part-time trading is very much possible because you see that camcorder over there on the right? Well, you can actually use your charts like the zoom lens on a camcorder. You can zoom out and get the big picture of the day by using a higher chart setting, not a daily chart, that's way too big. Not even an hourly chart setting, that's still too big. Not even a 30-minute chart setting, that's still too big. Guess what? I'm going to actually give you the settings that we use in our TradeSafe system. So do stay tuned so you can see what the wide angle setting would be. But you will start with a higher setting, and that will give you a sense of the market's direction and possible trend for at least half the day and probably the whole day. And as you zoom in, I use a 3-to-1 ratio that allows you to adapt. You zoom in to what I call the midpoint. That's where the dominant cycle exists. And that is going to give you a sense of what the market is going to be doing for about an hour or two. But then when you get a setup for a trade, you want the lowest risk. So you want to drop down to the smallest setting that is reasonable. And that is the setting that gives you a low risk surgical entry, as I call it. So we achieve that by utilizing ratios. See those three charts? It's the same market. It's just three different chart settings. The big chart on the left is the highest setting. It's already just begun a downtrend. If you zoomed in 300%, you see what it would look like at that setting. And then if you're ready for a trade, you would zoom in another 300% with that much smaller setting. And that gives you the granularity and low risk you need to take your trade. This means you do not want to just use a single chart for your trading. Avoid one size fits all, folks. Okay? Because when you have these three types of charts, it allows you to do something that's so critical. It lets you custom tailor your trading based on the strength of the trend, because the TradeSafe system is a trend following system. I know there's all kinds of ways to trade. There's breakout, there's range trading, there's counter trend, and so on and so forth. But the one that typically produces the most money and is the safest and easiest to trade and has been around the longest is trend following. But just knowing that you have a trend with your indicator isn't enough. You want to gauge how strong is that trend, because that's going to dictate what the market is capable of giving you. It's going to show you exactly what exit strategy you're going to want to use. Again, no one size fits all. So going forward with ratios, I'm going to now show you the formula for free. I'm giving you right out of the TradeSafe system how you can calculate for any market you want to trade, but I'm going to use the indexes. We all heard of the S&P, the Dow, the NASDAQ, and the Russell. Those are the indexes. If you were to trade the futures version of them, they're electronic. They're called the minis, M-I-N-I-S, and they are traded at an exchange in Chicago, the Central Time Zone. So that means their open is at 8:30 Central, 9:30 if you're on the East Coast, and their close is at 3:15. Now, technically, they do trade around the clock 24 hours a day, but 95% of the volume occurs during the daytime trading session, which overlaps and extends a little bit further than when the stock market is open. That's when you want to be focusing. So from the open to the close, from 8:30 to 3:15, you want to calculate the number of minutes to determine what would be a daily chart setting. You may say, well, Michael, why don't I just use the drop-down menu in my Thinkorswim or whatever platform I'm using? Because it's an amateur platform and you can't dial in the exact number of minutes. It is not going to give you what you need. I live in Austin, Texas, and there's a saying in Texas, don't take a knife into a gunfight. You want to use professional caliber software. So I wrote my system for a platform called NinjaTrader. I'm not telling you to give up your Thinkorswim. If you've been trading options with it, great, that's wonderful. But it is a very poor quality day trading platform. It was grafted on as an afterthought when it was originally designed. Okay? So what I'm getting at is you will want to know the setting for a daily chart instead of using the generic drop-down menu that says, oh, daily, hourly, 30-minute, and so on. You will set your first chart setting at 405 minutes. That's how many minutes there are from the open to the close, from 8:30 to 3:15. But that's a starting point. From there, you're going to count down, looking for the next smaller integer that divides into 405, except for itself, that gives you no remainder. What is that number? 135. If you put a chart setting of 135, you can't day trade with that, obviously. It's way too big, probably even for swing trading. And you keep doing that, dropping down. What's the next biggest number after 135? It's a setting of 81. These are numbers you probably just never hear about because people typically fixate on these generic numbers like 30-minute, 15-minute, 10-minute, 5-minute, and so on. They're useless. What you need is to be able to tailor it to the market you're trading. So let's continue what I'm doing. I left off at 81. If we maintain a 3-to-1 ratio, remember I talked about that, the zoom lens effect? You take 81, and what is 1/3 of 81? It's 27, almost a 30-minute setting, but it's actually more accurate than the generic 30-minute setting in your drop-down menu. So still, 27 is too big for day trading. What is 1/3 of 27? 9. 1/3 of that is 3, and 1/3 of that is 1. These are your actual settings that you use. The chart on the left, the 9-minute setting chart, that's the equivalent of a wide angle view of the market for that chunk of the day. And if you zoomed in 300%, 1/3 of 9 is 3-minute. That's your dominant cycle. But to achieve the lowest risk with the smallest bars, you want 1/3 of that, and that would be a 1-minute chart. Now, I need your feedback. Give me a yes and let me know. Do you understand how I got this far? Can you do this? Do you think you can do that? Give me a yes. I need some feedback so I can go forward. Excellent. Okay. Now, where do we go from here? Well, I mentioned at the outset that way back in the 90s and nowadays also, we have this thing called volatility. That means that there is the market is being traded on hyper. And when you've got trades going at a much faster rate, the order flow is really fast. The average size of a bar tends to be bigger than usual. And when the bar size is bigger, so is the risk. So that means oftentimes you will have risk levels on a 1-minute setup bar, as we'll get to later. That's too much for the TradeSafe system. I haven't yet told you what our risk levels are. We'll get to that too. But what I would like to introduce you to is that we are giving you an alternative to just taking your trades using a 1-minute chart. You can use something called tick charts. How many of you have ever heard of tick charts? Type yes. Pardon me. Anybody ever heard of tick charts? Okay, some of you have. All right. I'm not going to try to go into a lengthy explanation. Let's just say that instead of time and price, in other words, over a span of 1 minute, 60 seconds, the market moves up or down so much in price. That's time and price. Tick charts are more related to volume. In other words, when a certain amount of trades have occurred, the market's moved up or down one or more ticks, then if you have a setting on that bar, let's say it's 144 trades or ticks, then that bar is finished. So there's no time in a tick bar. So that may be confusing to you, but I would invite you to please visit with me. As I said, schedule time with me and find out how tick charts work so that you will understand how tick charts can give you additional entry opportunities. Now, before I leave this slide, I want to let you know that typically on the 3 indexes that we follow, the Dow, NASDAQ, and Russell, we actually don't follow the S&P because it got corrupted by the institutions. It had actually too much volume, too much of a good thing. But if just all we did was follow those 3 markets, you're going to get more trades in a day, more setups than you can possibly follow. So I want you to be reassured that at minimum, you will probably have, even on a single market, 6 to 8 setups. So with that being said, some of you may be thinking or have been asking me before, hey, Michael, that's great. I know you got a trend following system and that's all well and good and you got your chart settings, but I get killed in congestion when the market is chopping. I need something that keeps me out of trouble. Will your TradeSafe system keep me out of chop and congestion? Yes, it will. As you see in this screenshot here, you see the price bars and see that rectangle that's superimposed over the price bars. That's actually just letting you know what the algorithm is using to calculate when the market actually stopped trending and went into congestion. It's not the actual period of congestion, it's just it's the span of time that the algorithm was basing its calculations on. Where did the actual congestion occur? Down here. At the bottom of the chart, where you see these colors, green, that's an uptrend. Drop dead simple. Salmon pink color right here, downtrend. Back into an uptrend. But what about when there's no color? That's when we had no trend. That's when we were in congestion. And that's when you, with no trend, you don't even want to be thinking about taking a trade because this is a trend following system. So you might say, okay, well, how will I be notified? I don't want to just sit there all day long. You will get both visual alerts and audible alerts about when congestion starts. And that's going to be on every single chart, even the ones that you have hidden. Maybe you're following these three markets I mentioned, the NASDAQ, the Dow, and the Russell. And we've got the 9-minute, the 3-minute, and the 1-minute chart we've talked about, and we've got some tick charts for each market. Well, if you're only looking carefully at one market and the other two markets are hidden, how are you going to know if you're suddenly getting a trend on a chart from another market? Well, you will get an audible alert, and it'll be automatically updated in real time. Every time you get congestion or even a change in trend from up to down or down to up, you will have your computer talking to you. And when we go to the charts, you will see when we have trend agreement, that'll be the visual part, just like I'm showing you down here. It's simply green or salmon pink for up or down trend. No color means no trend. But also you will hear while we're doing our trading, you will hear the computer talk to you in plain English. It will let you know when you've got actual congestion, when you've had a breakout from congestion, or if it goes back into congestion, that's called a fake out. There's a host of various alerts that your computer will give you. It will talk to you. It doesn't make some dumb sounds that are really frankly useless. This allows you to take a break. Maybe if you're following these three markets and none of them have any trend agreement, and I'll explain what that term means in a few more minutes. But bottom line is, there's no reason to be looking for a trade. Well, you're going to take a break. I told you, you want to be able to do part-time trading. Get out of your chair periodically. Say you go into the kitchen and fix a sandwich, and then you hear your computer talking to you. You got your speakers cranked up loud, and it lets you know that you've got a breakout in a resulting trend. Then you want to scurry back to your chair and take a look and see what's going on. Does that make sense? Okay. Well, Henry, I appreciate you giving me your phone number, but I'm not going to be calling anybody. You are going to get an email from me with a schedule that shows you when I have openings, and you can pick the date and time that works best for you. How's that? And you can ask all the questions you want during that time with me. Very good, he says. Okay, so I've just now covered how we can keep you out of trouble and how the heart and soul of the TradeSafe system is the master trend indicator. It lets you know when you have a trend and when you don't. It's on each and every chart in each and every market, whether it's visible or not. Because this way, you will always have a real clear signal as to when it is safe to be looking for a trade. But you know what? Beginners focus on the entries way too much. Professionals, they put their real attention on the exits because that's where the money is made. So let's look at this screenshot on the right. It's already in an uptrend. As you see, it's green. And you see that big red arrow here that's showing the entry. That's because the market before the screenshot started had already been in an uptrend, and it retraced or pulled back down to that moving average right there. That little dashed line, that's a moving average that's in our system. Okay? Well, that's part of the steps to entering a TradeSafe trade. And I will introduce you to what those steps are as we get into the charts. But for right now, I just want you to know that if your last bar in this retracement or pullback is called the setup for the trade, it's the setup bar, then where would you get in? You would park a resting order. A stop limit order is the technical term for it. That eliminates slippage. And the market would have to trade through it. So the next bar didn't. If you had parked an order one tick above the high of this bar, it took 2 bars later before price would have traded through it and put you in the trade and you were off to the races. Now, because we don't use a one-size-fits-all way of managing and exiting a trade, and I'll introduce you to that more as we go further into this presentation, I'm going to, for right now, say that one of these exit strategies is called scaling out. That is, instead of simply jumping in and jumping out really quickly, that's called a scalp. Scaling out would be, hey, I think there's a lot of potential for follow-through. I really want to ride it for as much as I can, but I would like to at least hedge my bet and take some money off the table. So let's say you got in right here and you exited right about there for half of your position. And that way you've got a paid for trade. Well, we're not done yet. If there's still gas in the tank and price keeps moving higher and higher as it did in this screenshot, you're going to use this trailing stop indicator, the blue dots. And that is going to self-adjust, as you'll see when we go to the actual live charts when I do a replay trade. And it will adjust itself, giving breathing room. And when the market starts to falter, as it did up here, it started to actually reverse course and go back down. Notice that the trailing stop indicator rushed up and locked in the profit, and this price bar, the last one, hit it. And that's where we actually exited the trade. You will see all of this in real time, and it'll be fully automated. You don't have to do anything. So this means that you don't have to guess where to get out. Way too many of us spend a whole lot of unnecessary anxiety guessing about, well, do I get out at a Fibonacci level, at some support or resistance level, a market profile level, or whatnot. All the exit strategies are pre-programmed into the TradeSafe system, and they're predefined. And you would pre-select one of them before you actually entered the trade. And I'm going to, again, give away something so that you can try it out yourself, so that you'll be able to play around with it and see how to determine whether you want to scalp or scale out, because it's all based on the strength of the trend. Now, I haven't told you yet how to determine trend strength. I've shown you how to determine trend. That's this trend indicator down below. That's when it changes color or disappears, when there's no trend. But if you have a way of gauging how strong that trend is, that's going to inform you as to whether you really want to do one of two things. Do you want to just get in and get out and do a scalp? And the baseball season just started, so I'll use a baseball metaphor. You'd bunt and just get on base. You hit a single or something like that. That'd be a scalp. But let's say you got the wind at your back and you want to swing for the fences. That would be scaling out. So whatever your strategy is that you would pre-select, once you're in a trade, the automation takes over and you don't have to think about where to get out. It's taken care of by the system. This gives you super high probability and real consistency. Okay? Now, if I were to use a symbolic example of a 9-minute chart that's in a strong uptrend, and a 3-minute chart, the intermediate chart setting, is meandering in a slow downtrend in its own little world. And the 1-minute chart, that's the one with the low risk surgical entry that if you get a setup, it just started an explosive uptrend rally. Well, they're not in sync with each other. What you would really optimally want is this, but I hate to break it to you, you're not going to get that kind of agreement all the time. It actually occurs rather infrequently. So that means we need a set of rules or conditions that break it down so that you know which exit strategy to use, depending on how many of those are trending together, up or down. So here it goes. This is the exact same thing I teach my own students. It's in my TradeSafe system. And in order to know which exit strategy to use, we use a rhyme, a teaching mnemonic. And it goes like this. The minimum is the 1 and the 3 need to agree. Best is if all 3 agree. So if all 3 of them, the 1, the 3, and the 9-minute charts, are trending together up or down, and that includes the tick charts, you have the potential for a really strong price move with a lot of follow through. You don't want to throw that away on a scalp. You want an exit strategy that keeps you in the trade as long as possible and milks that trade. You want to scale out, right? But I already told you, you're not going to get that level of agreement really frequently. So what happens the rest of the time? If only 2 of the charts are trending together, it's not any 2 charts. It has to be the one you would enter on and the next higher setting chart. So that would be the 1-minute or tick chart and then the 3-minute. So if only the 1 and the 3 agree and the 9 doesn't, maybe it's going in the opposite direction, or it's maybe in congestion, not even trending. Well, then you've got the potential for a trade you can take with some follow through, but it's going to be a weaker, briefer price move most likely. You would most likely want a scalping exit strategy. So this was another giveaway from me to you. Please type yes if you understand how you can do this in your own trading. Give me a big yes and let me know if this makes real logical sense to you. So let me know. Okay, thank you, thank you. Okay, I appreciate that. Now, knowing what we know so far, you may say, okay, Michael, if I do these things, if I use your system, let's say, what can I reasonably expect? Remember, I'm not going to break the rules of the FTC and make all kinds of promises and guarantees. That's not legal. What can you reasonably expect? Well, we'd all love that super straight equity curve that goes to the moon. But if we stick to the example I was using before, and that's going to be the indexes, like the Dow, the NASDAQ, and the Russell that I was using as an example before, they have their unit of measure isn't like shares of stock, they're called contracts, okay? Kind of like if you trade options, you have a contract. Now, the amount of margin requirements for day trading the minis is really small. You may be shocked when you hear this if you didn't know it. I already told you it takes $25,000 just to open a trading account to day trade the stock market. What if you wanted to trade, let's say medium to small size, 2 to 4 contracts at a time? You may say, what does that really mean? I can't relate to the stock market. What does 2 to 4 mean? A single contract in the minis typically has the equivalent of around $50,000 to $100,000 worth of buying power. Yeah, and you get huge leverage and you don't pay any interest at all for that leverage. Now, if you traded 4 contracts, I recommend, instead of the $500 minimum per contract requirement that the brokers ask for, that's right, that's all it takes. They say if you can open an account with $500, you can trade 1 contract. Actually, they would prefer you to put a lot more in because they don't want you to get in trouble. So what do I recommend? Be overcapitalized so that you don't trade with your back to the wall emotionally. If you get a few losers, I would recommend about a $5,000 account. More would actually be a little bit better. But that's still a long ways away from a $25,000 account for day trading the stock market. So if you have a $5,000 account, what can you reasonably expect if you traded 4 contracts? Well, in the emails that you got that invited you to this session today, I mentioned that you can have a reasonable expectation of getting a return on your investment, ROI, of around 2% to 4% average every day. Now that's an average. You're going to have some days that are better, some that are worse. How do we arrive at that? If you take every single trade that the system generates a signal for, and that's all day long, Now, we're not talking about part-time trading anymore. We're talking about if you sat there all day long and took every single trade and you did it Monday through Friday and you did it for a full month. That's approximately 20 to 22 trading days per month. And at the end of the month, what's your net profit? You deduct the losers from the winners and not counting commissions. You say, okay, how much did I make? You take that amount of money, your gross, or really in this case, net profit, and you divide it by the number of the trading days, 20 or 22. That gives you about $100 to $200 a day average return. That's where that number came from. And if you divide that into the 5,000, that's where the 2 to 4% came from. Has anyone got a question about that? Otherwise, type yes if you understand the simple math on how we arrived at it. And while some people are typing, I want to reassure the rest of you who might be saying, 100 or 200 a day, that's lunch money. I need to make a whole lot of that, a whole lot more than that, rather, because if I want to give up my day job, I want to make a lot more. Well, obviously, if you've got a bigger account, you're going to trade more than 4 contracts. I'm just simply using 2 to 4 contracts as a small size example because sometimes a lot of students that come to me, they don't have very much money. All they can afford would be a $5,000 account. And for them, a lot of them, they'd say, oh, I'd be delighted if I could make 100 or 200 bucks a day. Okay? Okay. And Henry says, no, I do not have $5,000. Well, Henry, then you would want to talk to me, schedule time with me, and we can discuss what your options are for whatever amount of money you would have to day trade with. And I would be able to show you what you can do so that you can still participate. Okay? And Mary, what are you talking about, MES or MNQ? Unclear about that. You need to spell that out. All right, now moving along. Oh, the micros. Okay, of course. The reason that doesn't stick in my mind is, yes, I know what the micro minis are. Instead of a full-size contract, what Mary's referring to is something that's 1/10 the size and value per tick. For example, if the market moves up or down 1 tick for the Dow, you've made or lost $5. But with the micro minis, the value of a tick is 50 cents. You won't lose much, but folks, you ain't going to make any money at all with the micro minis. At best, they're just fun to play with. Okay. Yes, this works on them, but when I train people, we're going to be using the full size contract. Now, for folks like Henry, yeah, maybe he would use the micro minis and wouldn't need a big size account, and he would at least have the experience of trading real money, but he wouldn't need as much to start with. So Henry, that would work for you. All right, let me continue on. I don't want to fall behind too far. I know that some of you who may not have very much money, maybe you can meet the $5,000 minimum, but you really would like to make a lot more. You would like to be able to make enough to replace your day job or whatever your goal would be financially. Well, here is another free giveaway. Here is a safe method that you can use to actually increase your account size and not have to worry about putting yourself in jeopardy. If you started with a $5,000 account and you didn't take any money out as you made money, you kept the money in the account and you built it up to a $7,500 account, that's an increase of $2,500. When you hit that level, you've built it up by $2,500, you're going to increase your trade size by 2 more contracts. So if you started with 4 at a $5,000 a $5,000 account size, and you're now at a $7,500 account size, you can trade 6 contracts. You're not doubling, you're just adding a pair of contracts for every 2,500 you build your account. That is a slow, safe, and steady way to build up your account. And by the same token, if it drops, you would back off your trade size. Anybody have any questions about that? Okay, got it. Now, some of you who are math whizzes may have already kind of calculated in your head and said, you know, Michael, there's 2 to 4% return on my investment averaged every day. If I were to take every trade and do it every day, my God, by the end of the year, I would be like Gordon Gekko in the movie Wall Street. I'd be the master of the universe. It is theoretically possible, by the way, to achieve on paper about a 4,800% return. But folks, let's stop the hype. I don't do hype. That's not real. Okay? So let's take a look at what is much more likely. We talked about part-time trading, remember? So instead of trading every day, all day, why not say something more reasonable? Instead of 20 or 22 days, let's say we backed off and you only traded 15 days out of the month, half the month. And instead of trading all day long, where you would make 200 bucks a day on average, let's just say you traded half a day and you made an average of $100. Well, then for those 15 days, averaging $100 a day, that is a $1,500 return on a $5,000 account, which would be over a 30% return on your investment. And for those who've already heard me say this before, I'm going to do it again anyway because I like saying it. There are hedge fund managers out there who would literally kill to make 30% return on their hedge funds in a year, let alone in a month. And guess what? We've actually had single trading days where we've exceeded 30% in one day. So it is possible. Every day is different. So yes, we would all love to have that super straight equity curve, but you know what is the biggest barrier between achieving a really good, strong tilt on that equity curve? You. You are not a clone. Every person is different. They have a different personality. Just like markets are different and have personalities, in case you hadn't figured that out by now. You have to be benchmarked. Professionals do this, and I include this as part of my package. I actually have a full course and my coaching, and before you graduate, you must get calibrated to the system. What does that mean in plain English? Well, after you've gone through the course and you've learned everything you need to about how the TradeSafe system works, you will then want to tune it to your personality, your comfort zone. Some of you are really aggressive, I bet, and you'll probably take a lot of trades that the rest of you might not want to. Some of the rest of you might be very conservative. We're going to make allowances for that with benchmarking, because in the TradeSafe course, you're going to journal every single trade that you have been practice trading up until then. That's right. I don't let you trade real money until you've been benchmarked and built an authentic track record. I don't want you to put your money at risk till you have something authenticated that will give you the confidence that you will be able to keep making money. So if you've been taking all these sim trades or practice trades, and you found out through the journaling, I give you a pre-formatted journal and a spreadsheet to track your stats, you will know based on all of that experience, all these different scenarios about, well, did this particular support or resistance level get in the way of my trade? Every time I see that over and over, my trades just didn't seem to work. I'm not going to take that trade if I see that situation again. That's benchmarking. You're going to pick the best of the very best scenarios or context. It is still a mechanical system. It still is rigorous in terms of entering It's still Boolean logic, and it's still automated once you're in the trade, but you're in control. You're the one that's going to pull the trigger based on your comfort zone. Please type yes if you appreciate and now understand the value of benchmarking, because benchmarking is something nobody else offers. And frankly, I think it's a crying shame, because unless you're benchmarked, you're making an assumption that, hey, I can just buy the stairway to heaven like the old Led Zeppelin song. You can't do it. You've got to get yourself calibrated to the software and the system. Okay? All right. Well, I've led you this far. Now it's time to go ahead and go to the charts themselves. Now that you have enough information to hopefully understand what we're going to be doing, and I'm going to freeze my screen at this point. If you're watching a replay, then you will actually see what I'm doing, but that's neither here nor there. And now I'm going to bring back my screen. Please type yes and let me know if you can see my charts. I need to know that you can see my charts. Okay, great. Now, I'm not going to go into every little tiny detail of what's on these charts, but basically, let's remember that the rhyme said the 1 and the 3 need to agree, best as if all three agree. Dead center is the 1 minute chart. Underneath it is what is called an alerts log. Every time we get a change of trend or we get congestion or something, like, see where my cursor is hovering, it's letting you know if something has already occurred. So that's just a log of all these breakouts, fake outs, and whatnots. This is your data box. Wherever you put your cursor, that's a readout of not just the open, high, low, and close, but also our proprietary indicators with their readouts. Now, this is the 1 minute. I said it has to agree with the 3. Here's the 3, and there is the 9. Now, how do we know if they do agree? Salmon pink color, downtrend. Don't think, oh, lower lows or lower highs, because that is so, pardon me for saying this, stupidly ignorant, because it is subjective. I could get a half a dozen different traders together and I wouldn't get a consistent answer as to when the trend started. So higher highs, higher lows, and vice versa is useless. You need a real authentic trend indicator that shows you when the trend started reliably. So we got a downtrend here. Over here on the 3 minute, it's the same color. What about on the 9 minute? Ooh, it was in an uptrend for a period of time, and then afterwards, the last couple of bars, there's no color. We're in congestion. And by the way, there is that rectangle I showed you that the algorithm uses for calculating when you are in and out of congestion. As you can see, it was an uptrend up until a certain point, and then it had no trend for a while, and then it was in a downtrend. It had a successful breakout, and then it went back into congestion. That's no color. Then it went out of the top of that box, so to speak, and it was in an uptrend, and then it went right back in, a breakout, fake out. So what I want you to know is, if the 1 and the 3 agree at the bare minimum, we can use one of 2 different exit strategies, either scalp or something called a scale 50, where we're going to set a quick and easy to reach target and scale out of half of our position at a $50 profit. But if all 3 agreed, which they don't, I would do a scale 100, and that would be the equivalent to what I just said about a scale 50, except we'd raise the bar and say you could scale out at $100 and then try to trail a stop. So what we have right now is 1 and 3 are the only 2 that do agree. Has anybody got any questions so far? Because what I'm going to do is remind you, oh, and by the way, you may say, what's over here? These are the 2 tick charts. We're not going to use those today. We're just going to take a trade on the 1-minute chart, real straightforward. And now that we have step 1 of the 4 simple steps to entering a TradeSafe trade, and I'm going to repeat this several times so that you remember it. There are 4 steps to getting into a TradeSafe trade. Trend agreement, the 1 and the 3 need to agree, best as if all 3 agree. The next is a retracement to a particular moving average setting. That's step 2, and it has its own conditions. And then step 3 is we want independent, uncorrelated confirmation with an oscillator. That's this red line that's at the bottom of each chart that goes above overbought or below oversold. And the final step is we determine the risk, and I'll explain what that is when it's time to take the trade. So we've satisfied the first simple step. It's just brain dead simple. Look for the colors to match. And when they do, you don't need to be looking at all of this. Let's just simplify it and maximize the window itself. For this chart, we're going to take the trade on, and I'm going to move it more to the middle so you can see it. I'm even going to raise this data box so you can see what I'm doing more easily. Now, I said that the second step is going to be a pullback or a retracement to a moving average. Well, you may be wondering, where are the moving averages on this chart? I've actually deleted them. I did that simply because it gets annoying to have people repeatedly ask me for the settings of my indicators. So it actually does normally have the moving average visible, but don't worry. I'm going to show you that even if you were flying blind and didn't see a moving average, you're going to actually have true mechanical system here, an accurate readout tick by tick of how close you're getting to it. And that's going to be this indicator right here where it says Rule 21. But before we do that, I'm going to do a simple drawing. I'm going to superimpose it on what we have here. We currently have a downtrend. If it keeps going a little bit further, let's say it goes to about there, then we're looking for the second step, a retracement. Let's say it goes to about here approximately. There are requirements. We want it to be a straight and direct one, not meandering, approximately 45 to 90 degrees. There's a minimum number of bars. It can't just suddenly spike up to the moving average and a single bar. That's not normal. So there's a minimum number of bars. And you want it to either touch that moving average, in which case this readout, when the bar gets to touching it, the readout would say 0, meaning it's making contact. But we have a tolerance level. Maybe it didn't quite reach the moving average, or maybe it overshot and the bottom of the bar is above the moving average. There's this little zone of influence, a sweet spot, that is a tolerance level that we found that really still works. Plus or minus X number of ticks. I'm not going to tell you what it is because that's part of the system. But again, I'm giving you the specificity that is missing in all these other approaches to where, oh yeah, I've done this before. I've done pullback or retracement trading. I haven't found it to work. Well, that's because it wasn't real precise. It wasn't a real system. This is. So let's suppose that you reach the highest point in the retracement, and I'm going to draw a little vertical line here to represent a pretend price bar like that. And it's now going to be what is called your setup bar, the one that is setting you up for the trade. That means if you fulfill the first and second condition, trend agreement, 1, 3, and 9, however many of them agree, we have the 1 and 3 here. And we have, as you'll see when we get the pullback in a few minutes, it'll retrace to the moving average and fulfill that condition. We then want to watch this red line. It's an oscillator. I'm not going to tell you which one it is because people always ask me. It's a repurposed, reprogrammed, off-the-shelf indicator that's been reprogrammed. All it needs to be is overbought, straightforward. And no, it doesn't need to get out of overbought to put you in the trade. That's what most people are accustomed to. I don't use indicators to put us into a trade. Why? Because they lag. I use the market to do it, as I'll show you in a few minutes. So all we need is just get into overbought. That'll be the third step. The final step, as I said, is going to be risk, and I'll show you when the time comes how we determine the risk. So let's assume that price having retraced all the way up to here, it didn't change trend. It's just like a stretched rubber band. It's built up all this tension, and you are hoping that it's going to snap back, and you want to ride that as it goes back in the direction of the existing trend. You're going to want to park a resting order, which I'll draw a horizontal line right there that represents where you would have a stop limit order. Limit orders eliminate slippage. A stop limit order is just a combination of a stop order and a limit order so that you can actually do that. Any questions from anybody? Okay, great. So, and for the person who came in late and missed all of what we've said so far, you will absolutely want to watch the replay, okay? Because none of this is going to make sense without what you missed. So just letting you know that. Now, I'm going to actually erase this right now, and we're going to take you to that point where I am going to place an actual order. So here we go. Let me get rid of this, and I'm going to turn it on, and we're going to watch the chart update itself in real time. This is our counter right here. Every bar on this 1 minute chart counts down, 59, 58, 57 in a linear fashion. So when it gets down to 0, you don't want to wait for 0. You want to do it about 3 or 4 seconds before 0. That's when you would actually park your order. I'm letting you know this well in advance. Now what we're waiting for now is the retracement, the pullback. But I don't want to wait all afternoon or evening. I'm going to speed this up to about 6 times normal speed, so we can get a pullback going here. There we go. See it starting to move higher? It would be moving towards where the moving average is actually present. So let's let it keep going. Got a little bit further to go.
1 minute. Breakout reset.
Oh, and in case you heard that through my computer, it said the 9 minute had a reset. That meant that it went back into congestion after attempting a breakout. Now I'm going to slow this down and pause for a moment and make sure I know where I am because I got distracted. 1, 2, 3, 4, 5. Yeah, we got a little bit further to go. So let's turn this back on. 6 or 8 times normal speed, and we'll slow it down once we get the next bar started. Here we go. So we're going to slow this guy down to normal speed. This is now, if you look in the data box down here, notice that where it says Rule 21 at the bottom of the data box says 0. That means some part of that bar is actually making contact with the actual moving average. Now let's pause for a moment. Notice the counter is already getting close to 0. What you would do in real-time trading is, as it got about 3 or 4 seconds before 0, is you would look for the final 2 steps. Step 3, I already said, just needs to get overbought. Oh, look, we're already overbought. So we've satisfied that step. What about risk? Now it's time to explain risk. We have different risk levels for different exit strategies. If all you're wanting to do is scalp, well, the most you can lose If you're trading the minis, like the Dow, NASDAQ, and Russell indexes, the most you can lose if you're scalping is $70 on a per contract basis. The reason I don't tell you about how much the whole trade is going to lose, I don't know how many contracts you might trade. So the most you can lose is 70, but it's not a fixed amount. If the bar is smaller, then the risk will be smaller. That's because we use something called logical stops. Now, when you're using an exit strategy that is scaling out, which is what we have pre-selected here, we're going to, after the trade starts and it gets into automation, we're wanting to try to hit a target of $50 of open profit, and we want to take off half of our position at the $50 level. That'll pay for the trade, right? Well, if you want to scale out, we want to tolerate a higher level of risk, as much as $100 per contract. And again, if the bar is small enough, it might be smaller risk. If you wait for this bar to finish or nearly finish, I'm going to turn it on and let it get down to about 3 or 4 seconds. And I'm going to show you what the risk level is in the data box. All right, I paused. Look in the data box where the risk says right here. The risk level is only 30. Oops. Pause. There we go. It's only $45. You may say, oh, those stops are too tight, Michael. You'd be stopped out all the time. Actually, how is that going to be possible if my system is achieving, with real world trading, at least 87% winners? It's because we use something called logical stops. This pullback is going to become a pivot point. You see this V-shaped bottom? That's now a support level. The inverted V shape up here is a resistance level. Well, once you're in the trade, it's going to leave behind up here an inverted V. It'll be a resistance level. If you start in the trade and price comes back and trades above the resistance level, basic technical analysis will tell you that you're no longer in a downtrend. You would be in an uptrend because you broke through resistance. You are now in an uptrend. Why would you want to stay in a position, a short position, if the trend isn't even down anymore? That's why we call them logical stops. So we're going to park an order 1 tick under the low of this bar, as I said earlier, and let the market trade through it to put us in the trade. Then we're going to put our stop 1 tick above the high of that bar. So if this were a bigger bar, the stop would have to be further up, right? And further until the maximum of, if it gets above $100 risk, then you couldn't have taken the trade. And the readout is always going to show you what the risk is. So you don't have to worry about it. The readout will always tell you. So I'm going to park an order right now, 1 tick under the low of that bar. And a lot of you who have day traded may have used something called a DOM, D-O-M, depth of market. That's a small window like the data box with 2 columns of numbers, one ascending and the other descending, and that's the bid and the ask. It's not very intuitive to click on that, and then you have to take your eye off the ball to go do it. And it's so 20th century. The latest technology lets you park your order directly on the chart. Watch what happens when I right click. I know I get a whole bunch of stuff that pops up, but notice all the orders are grouped together for your convenience. And you're going to every time choose the final order. You're going to disregard these. You want to sell 4 contracts on a stop limit at that price. So let's left click it and listen for the computer to talk to you.
Order submitted.
Did you hear the computer talk to you? Type yes if you did. And notice, you've got a graphical representation of your resting stop limit order. If you change your mind before the market trades through it, you can cancel it right there. I'm not going to do that. But right here, the label is showing you what we already saw in the menu, selling 4 contracts on an SLM, stop limit order. Okay? So let's wait and see what happens. I'm going to turn this back on and let the market put us in the trade. Notice we haven't been chasing the market. Oh, it just took that long. Let's pause for a moment so I can explain what just happened. Automation has started. From here going forward, automation is what runs the show. This is your stop order, but I told you, you really want it to be 1 tick above the high of that bar's high. So I'm going to zoom in a little bit. I'm just going to drag it down and put it 1 tick, 1 tick above. There you go. And where you entered right here, that was 1 tick under it. This was your risk, the distance between these two. And that's your stop loss order right there. Well, what is the green line? This is your target for scaling out to take half of your position, 2 of the 4 contracts off the table once you hit $50 worth of profit. So I'm going to go ahead and turn it back on, speed it up a little bit so it won't take very long.
Target filled.
Target filled. So the computer talks to you and tells you every step of the way what happened. Now, guess what? Some other things happened automatically that were pre-programmed. First of all, what happened to our stop? It's not up there anymore where you could lose. Before you even scaled out, it happened much faster than you could have done. That's why it's programmed. Your stop, based on an algorithm, was canceled and replaced, effectively moved to where you would have entered, break even, plus 1 tick of profit. That way, if you didn't actually scale out and you came back up, you wouldn't have let a winner turn into a loser. You would have at least made 1 tick of profit for the 4 contracts at $5 a tick. You would have at least had a $20 winner. That would have paid for your commission and or slippage, and you'd have still had some money to add to your account. That's automation. But we did actually trade through the target, and that's why the green line, the target line, is gone. So we don't have a target anymore. What are we going to do? Well, first, before we look at what's next, this break-even stop, really 1 tick of profit, has been canceled and replaced an additional time. It's not for the 4 contracts we started with. Remember, we scaled out and took half of our position, 2 contracts off the table. That's why the label now reads 2. So it did that for you. These are things you won't be able to do in Thinkorswim or even TradeStation and a lot of other platforms. This is why I use NinjaTrader. You are going to get this much power under the hood, but it is so easy to use. Okay? Now, I'm going to restore the automatic scaling so you can watch and see what we're about to do next. I'm going to turn it on. We're at about 6 times normal speed. And you see the blue dots underneath where the price bar is? These dots right here? Once price makes contact, you see they flip around. That's our brand new trailing stop indicator. So what I want to do, and I'm going to pause again for a moment so you can follow what I'm doing. I want you to have an automated trailing stop so that instead of every time a new price bar finishes, you'll, instead of having to manually move your stop to some new position to lock in more and more profit, and you'd be guessing about where that should be. Wouldn't it be nice if it were done for you? This is the indicator that'll do it, but you first must tie the two together. tie the indicator to the stop. So we're going to attach it to the indicator. And I'm just going to go up here and make a couple of things. And I'm going to give it an offset of 2 ticks instead of making it be right at the exact level of wherever the dot appears. And by the way, one of these dots won't appear until the end of 60 seconds. You got a full 60 seconds before you see it move again. Now I'm on 6 times normal speed, so it's going to be quite a bit faster. So watch what happens as price gets further down. Watch what happens to these dots, because they're going to self-adjust. Every time a bar finishes, a new dot appears, and it's going to keep a certain relevant distance away from the price action. And kind of like a surface-to-air missile, it'll adjust its trajectory and rate of closure. It'll give a lot of breathing room if price is moving strongly in a good trend move.
3-minute congestion canceled.
Okay, in the background, in the meantime, it's letting me know that a congestion that was happening on some other chart. Ooh, look, it's getting close to where you'd be stopped out. I'll bet you if you were trading yourself, you'd probably be all in a panic. But if this is automated, you can just relax and let it go. Because if you did just relax and let the system take over, you'd be able to watch this trailing stop do its job. I'm going to speed it up to about 10 times normal speed. Now watch what happens. You see the dots are starting to move further and further down every time a bar is completed. And I do have a 2-tick offset. That's because I found that quite often price will come and kiss the actual indicator and then keep on going. That's what's going to happen in this trade. So we're going to re-engage it a little bit later. Now watch what happens. See how it hangs back and it's adjusting itself?
9-minute. 9-minute. Breakout confirmed.
Okay, the computer in the meantime is also telling us that the 9-minute chart is now in its own trend agreement with what we're seeing here, which is why we're getting such a strong move. All right, now things are starting to go sideways. See how the trailing stop indicator is real close? All right, so what I'm going to do is pause. In the real world, what you would do is you're going to let it continue. Actually, I'm going to let it continue on because it's got to trade down through that. There we go. You're going to reassociate or re-engage it like we did before, because it touched it. It didn't take us out of the trade. We're still in the trade. Notice the red line, the trailing profit stop is still there. All we're doing is re-engaging the trailing stop indicator to the actual stop. So watch what happens now that we're re-engaged. There's more gas in the tank apparently. I bet a lot of people would have thought, oh, this is where I need to get out. I'm going to jump out. And they would have been pretty happy. They would have made some money. But if the market kept right on going, then they would have had the woulda, coulda, shouldas because they'd have left money on the table. So let's see what happens. Does it drop further? Yes. And the system will adjust accordingly. And that's why you don't need to guess where to get out. It will do it for you. Notice it's hanging way back because we got a good strong price move, but now we're getting a little bit of backfilling, coming sideways and reaching back up again. You'll watch that trailing stop indicator get closer and lock in more and more profit until finally it will take us out of the market. You don't have to guess where to get out. Getting closer and closer. Almost. Oh, maybe there's still more gas in the tank. You see, if I'm trying to second guess it, I'm not going to always get it. And there we go.
Trend loss.
Okay, so I did pause and it took us out of the trade. This is where we started the trade. We scaled out at approximately this point right here. If you want to see the actual prices of the fills, let me put those, let's see if they're actually going to show up. There they are. These arrows are showing you where you actually got in and got out. And there's another setting that shows you the prices also. All right, with that being said, would you like to see how much? Okay, Raymond, you will want to talk to me about that, but the short answer is Forex is a terrible market for day trading. It's much better for swing trading. Okay, you can use this, but you would have to use higher setting charts. A 1 minute or a tick chart really is at the level of noise for Forex trading. Okay, but there's far more to it than that. So you will want to consult with me so I can advise you and find out what your goals are. Would you be willing to do that, Raymond? In the meantime, I have a question for all of you. Would you like to see how much the trade made? Type yes. I'm going to open up the hidden profit and loss window. There it is. I don't know if you can see it. Maybe the GoToWebinar control panel is covering it, but the display is saying $820. So my question for you is real straightforward. If you had a pure Boolean logic mechanical trading system with real clarity and precision, no shades of gray, no subjectivity or discretion about where and when and how to get in, and once you're in the trade, the automation took over for you faster than you could ever mouse around and move things, wouldn't you want to be able to have a system like this that adapts and adjusts to what the market can give you? It would know when it's appropriate to scalp. It would know when it's appropriate to swing for the fences. So give me a yes if you like what you see here. Big yes, says Henry. He likes it. And so does Mary. And so does Henry. Okay. Yeah. All right. So what I'm going to do at this point is go back to the presentation and show you some of what else is included in the package and wrap things up. You've been very patient with me. And as I go back to the presentation, let's reiterate that this is a trend following system, which is very safe and in my opinion is the most consistently profitable way of trading. And we utilize these tuned cycles-based multiple time frames. In other words, multiple chart settings that allow you to gauge not just do you have a trend, but how strong is the trend. And once you know how strong the trend is, that allows you, before you get into a trade, because after you're in, it's too late, but before you get a setup for a trade, how do I want to manage and exit that trade automatically? And that's where you get the different exit strategies, and that allows you to adapt to whatever the market is capable of giving you. All the while, you know you're keeping your risk under very, very tight control, and you know you won't get stopped out prematurely, not at 87% or greater real world accuracy. All of that automation really takes a load off of you, and everything from start to finish is Boolean logic, just like that flow chart. Your steps to getting into the trade are super precise, from determining the trend. The 1 and the 3 need to agree, best as if all 3 agree, to the pullback to the moving average. All you got to be is either touching it where it says 0 in the readout, or I'm not going to tell you what the actual number of ticks away is the tolerance level, but you will learn that in the course. And once it's satisfied that condition, all you need is independent, uncorrelated confirmation that comes from your oscillator simply getting overbought or oversold. And then finally, risk. Just take a glance at the last few moments and see if the risk is within tolerance. No more than 70 per contract if you're scalping, never more than 100 if you're scaling out. So we keep that risk under tight control. This is all very, very consistent. That's what you want from your trading. So I'm going to give you a real roadmap that you can follow. It's in the form of a full course. It's both online as well as in my coaching room. Again, I call it a coaching room instead of a trading room. And it says 90 days. It doesn't take you 90 days to learn. Like I said, I taught an 8-year-old kid. You can learn this in far, far less. But why do I offer you more than you need? I want you to be in my coaching room longer than that so that I can observe your behavior. Remember, I used to be a psychotherapist, and I want to be able to help you manage your emotions and become a consistent trading machine. It'll allow me to teach you all those nuances that are part of day trading that professionals know about that maybe you don't yet know about. I've got 25 years of professional experience that I want to share with you. So finally, you'll of course get benchmarked, and then you'll graduate. So it's a structured curriculum. It doesn't have to take 90 days, but by the end of it, you will be a professional trader. You will be able to compete against the professionals. You won't be low on the food chain like amateurs are. So if we add all of this up, what's included in the package? Well, a lot of vendors out there call what they offer a system. It becomes a generic term these days, and they're abusing that term. Probably 99.9% of what's out there is not a system. There are maybe 6 or 7 true mechanical systems in the world for day trading that are available today, and they start at the low end of around $3,000 and they go well past 10,000. No, I'm not going to ask you to pay anything close to that, so don't worry. But let's pretend, for the sake of argument, that I would price the TradeSafe system at the $3,000 level. Well, they don't include any of what I'm going to show you next. You're going to get me in your corner as a professional coach. Remember, I've been doing this a long time, and whenever I consult with my corporate clients, I get $500 an hour. You're going to get me for the full 90 days. Now you may say, what if I run out of time? I have interruptions. Am I stuck? Can I just not finish the course? Don't worry. If you run out of time, you can always just buy 1 month at a time of my personal coaching and access to the trading room, coaching room. And you also, by the way, get access to me offline. Nobody else does that either. You can call me up and you can spend up to a full hour if you need to consulting with me and getting questions answered if you can't wait for the next coaching room session. And by the way, what happens in that coaching room? I will not only take every single trade, including the losers. I will deliberately take losing trades because I want to use it as a teaching opportunity. I'm not like all those guru guys and gals who woulda, coulda, shoulda taken this trade, and they'll brag about stuff and they'll hide the losers. I want you to learn. I want you to understand. And to be sure that you're doing it, you'll wear a little inexpensive headset or use a mic. And you can talk to me in real time. You can interrupt me in the middle of a trade and say, Michael, why did you do that? You don't have to type. And this way you can get all the attention you need because you're not competing with hundreds of people in the trading room like a lot of people do. There's at most a half a dozen people at a time in my room. And to really assure you that what you're doing is correct, I can actually share your desktop and look at your charts and see you take your trades. And if you're having a problem, I can coach you through that so that we can solve that. Nobody else does that. This is because I really, really want you to succeed. So we're going to get you off to a really good start so that you don't have to spend a whole weekend like in the old days where I actually had to have people sit in on a weekend's worth of webinar with me. I actually took live students, recorded it, and all their questions, etc., and then broke it into bite-sized chunks so that you can watch it at your own convenience. That's what gets you up to speed at the basic level. Then, to make sure that your charts are all set up and you don't have to build them from scratch, you get our custom workspace and charting templates that includes everything. And it's a 5-minute installation process. But if you get stuck, or maybe you're not as computer literate as maybe you think you need to be, don't worry. I have an actual full-time support desk, and you can schedule time to have my support guy remote access directly into your computer and walk you through the installation process. I don't think anybody else does that except TradeSafe. Now, you've already seen the powerful master trend indicator that shows you when you're in a trend or in congestion or not, and it talks to you and shows you both. And also, you saw the 4 discrete steps with all the proprietary indicators that give you the readouts necessary to let you know, hey, all conditions have been met. It is now precisely the time to park the order. Pull the trigger instead of chasing the market. And then, once you're in the trade, automation takes over. I've got 3 different exit strategies that you can use. Scalp and 2 different scale out exit strategies, of which I shared one of them with you today. But also during that benchmarking phase where you build your own authentic track record, you may be curious about what people do during their 30 or more statistically viable sample of trades. They typically generate about $3,000 to $5,000. That gives them a high degree of confidence about what they can expect after they graduate, that they can keep making that kind of money. Okay? Then, if you're in my coaching room, let's say you have to leave early and you miss part of my coaching session, or maybe you want to review what you saw that day. I record everything. I've got hundreds of hours of archived coaching sessions going back years. So you can actually participate in that. And I also have some special tips, tricks, and techniques videos that you get as a bonus. Now, I told you I want you to be able to be a professional trader. That requires you to run this thing like a real business. That means you get a business plan from me, not just to map your goals. I mean, everybody says, oh, I want this, I want that. But you know what is much more important to run a successful business? You need guardrails. You need to say, what am I going to do if I get, say, 3 losers in a row? Typically, amateurs keep digging a deeper hole. That's one example of revenge trading or over trading. Or the other side of the coin is analysis paralysis. They freeze up and they can't even take a trade. You need to know what you're going to do and put it in writing. You take that a step further. How much are you willing to lose in a single day? Put a limit on it, or a week, or a month. You got to have a business plan, and this is what's going to guide you in your own trading as a business. Now, to maintain all of that, every time you take a trade, you journal that trade so that you've learned from it. You've captured the knowledge of why the trade worked or didn't work. And of course, the stats themselves go into the spreadsheet, and that's what we use, especially during the benchmarking. Last but not least, calling upon my previous career as a psychotherapist, I share with you a very powerful technique to forge diamond hard discipline, to enable you to avoid self-sabotaging behavior, that revenge trading, that analysis paralysis. So if we add this all up, you can see we got a lot of value going here. No, don't worry, I'm not going to ask you to pay that kind of money. Typically, instead of that, what I normally charge, and people who have paid it say, it's cheap at double the price and I've made it back in a month. Typically, I charge $39.95, but I want you to have the benefit of a limited time special offer. No, I'm not going to ask you to make up your mind right now today. I don't like that kind of pressure. Instead of $39.95, I'm going to slash that in half and offer it to you for $19.97. And you're going to want to know if you're really qualified to get started, because that means you're going to want to book a consultation with me. Those emails that you get a little bit later on with the replay link, you'll also get another link that lets you see my schedule so that you can find a date and a time that really works for you. And then that way you can ask me any question you want to, and there'll be no pressure, no hard sell. I never, ever do that. I just want you to feel that you come away feeling your time was well spent, and you'll know if TradeSafe is a good fit for you. And of course, I do offer payment plans because I realize that might be still a chunk of change for some people that they can't quite come up with all at once. I do have payment plans, but I told you I don't want to pressure you. I don't want you to feel that you got to make up your mind today. So you can take up to a full week to mull this over, which means please do use that time to schedule time with me. Use that link in the email to visit with me, and that way you can get your questions answered and you'll know if it's really for you. Now, some of you may want to say, I don't want to wait for the email. I want to jump to the head of the line and I want to go ahead and get scheduled as soon as possible. Well, then write this down. Here's a link that is going to be sent to you later anyway. It's daytradesafe.com/apply now. That allows you to see my schedule. It's not making you buy anything. It's just letting you schedule time with me. Now, what happens when you do schedule time? Well, of course, you want to do it quickly because these slots do fill up pretty quick. I want you to know that you have locked in your discount. If those slots do fill up before next Wednesday, midnight Pacific time, because that's the deadline, midnight Pacific time of next Wednesday, that's when the price goes back up to $39.95. But if you have scheduled and it falls after that, I will still do the right thing and honor the discount. Now, what do? Once you have a scheduled time, you call me. I don't call you. You'll get reminder emails and you'll even get text reminders. So make sure that the phone number that you're asked for is a cell phone. Now, it'll be a real valuable conversation. You're going to get all your questions answered. I'll even answer questions that aren't related to TradeSafe, things that are related to your trading in general. I'll be happy to try to help diagnose problems that you might be having because my goal is really your confidence. Now, I mentioned that we do have flexible payment plans. I want to emphasize really strongly PayPal. Now, some of you may have mixed feelings about it. You may have a mistaken notion that you got to have money in your PayPal account in order to use it. No, you don't. But PayPal does have this special little thing called Bill Me Later. And there's going to be a button on the order page when you decide you want to go check out how to place an order and join TradeSafe family. You will see one of the buttons that will show the Bill Me Later for PayPal, okay? If you click on that, it'll take you to the PayPal portal, and once you're inside, they will give you a soft credit check. It'll be about a 2-minute process. If they like your credit, here's what you get. Instead of with paying interest on your credit card, they will give you 6 full months to pay them back. And if you pay them back in 6 months or less, they won't even charge you a penny of interest. You can't beat that. So you really should try it. Now, this is unfortunately a policy of PayPal's, but they don't allow anyone but US citizens to use this feature. So if you're a Canadian or you live somewhere else, I wish I could offer it to you, but that's their policy. But I do have other payment plans, but unfortunately I do have to charge some interest because I'm assuming the risk. So you will see exactly what it is. You'll know upfront what the payments are, or if you've got a card and you just want to buy it outright, you can just jump right in and do it and get started. And the very same day that you click on a button and get started, you will have access to our members area that is password protected. All of the content, all of the training tools, the TradeSafe system and software, it's yours for life. You do not have to pay a penny to keep using it. It's yours for life. So you will want to book a call to discuss this in detail and find out. And here's that link again if you missed it the first time, daytradesafe.com/apply now. And I will honor any people who scheduled past the deadline. So pick the best date and time that works. The slots do fill up fast. There won't be any pressure, I promise you. And by the way, before you and I visit, please do take some time to watch the replay because I want you to know what this presentation covered. I can't recreate it in a phone call. So please take some time and watch the replay so that you're up to speed and can ask the questions that make the biggest difference. Okay? And let me see. Peter is asking, will Tasty Work fit your system? I don't know what Tasty Work is, Peter. You need to explain it. I haven't heard of it. So while Peter is typing, I do want to say one last thing before we go, because I did run way over and I apologize for that. Some of you have watched this before and you've reached the threshold where you're really ready to join the TradeSafe family and get started. Because the moment you do join, you will have full access and you'll start your training immediately. Okay? So if you really want to, without even waiting to schedule time for me, here is a link you may want to write down, daytradesafe.com, just like before, /I want in. All one word, I want in. That'll take you directly to the order page itself, and you can join the TradeSafe family immediately. So Peter, I didn't see you type anything. I would love to answer your question, but you didn't explain what Tasty Work is. I have never heard of it. Okay, it's a brokerage firm. If you want to use the NinjaTrader platform that my system works on, you have to have an account with NinjaTrader, okay? Now, it can be a token account. It doesn't have to be all your money. You don't have to give up all of what you've been trading somewhere else. But NinjaTrader is, in my opinion, one of the top 2 brokerage firms for the world of futures and commodities, which is what I start you trading on. And by the way, let's remember, I'm not insisting that this system works only on futures and commodities. It will work on the stock market, though I believe I made a strong case for why you really wouldn't want to day trade stocks. Same thing goes for Forex, for Raymond who wanted to know about that. So if you're going to be wanting to trade currencies or trade the indexes or other types of markets, and they live in the world of futures and commodities, AMP Futures and NinjaTrader are the top 2 best brokers there are. Okay? Schwab will not work, Henry. No, sir. Sorry. Schwab is for amateurs. I'm trading you to be a professional. You can keep whatever you got over at Schwab, Henry, and just peel off some of it to open a dedicated account for day trading only, since you're apparently not day trading right now. Okay? Okay, Henry has typed something I missed earlier. He said they were bought out by Schwab. Okay. Yeah. But as I explained, you will be opening an account through NinjaTrader. If you need more information on this, that's why I want you to visit with me. Please don't make an impulsive decision, say, oh, I don't think so. Let's at least visit, get all your questions answered, and then you will feel really comfortable about whatever your choice is. And is benchmark a test to pass? Yes. If you don't get benchmarked, then you've thrown your money away. You will not get the results that this system is capable of because you have never been calibrated to the system. You may think you understand the system, but until you have an authentic track record, Mary, you're only part of the way there. As the saying goes, you're spiking the ball on the 5-yard line. Let's get you across the goal line. Any other questions? I got time for one last short question. Okay, I'm not seeing any. Okay, Can I paper trade? Absolutely. Raymond wants to know, can he paper trade? Absolutely. And here's another great feature that Ninja offers. Let's say you got a day job and you can't watch the market at work, but you want to learn how to do this so that you can get up to speed and build your track record. NinjaTrader has a replay feature that's just like a DVR on your TV, your cable. Just like you can watch a movie at some other time, I could download today's trading and replay it tonight or at some other convenient time, and even fast forward through the dead stuff and play it back. So you will love that feature. You can, and by the way, the sim trading is as realistic and accurate as if it were real money, unlike a lot of other platforms that are really sloppy. Okay? Let's see. And Henry's saying, Henry, definitely visit with me. It sounds like you got some considerations, and I would love to be able to just address those for you. No pressure. Okay? There are no upgrades, Peter. This is the same system that I have been using for 20 years. One time in 20 years, NinjaTrader changed their programming language. And therefore, what my system was before wouldn't work on their newer version. So I had to completely reprogram, cost me over 10 grand, had to reprogram the system. And at that point I said, I'm going to throw in the kitchen sink. And that's when I automated everything and added a lot of new features. And because it became more than what it was before, not just a simple upgrade, I offered a very low cost upgrade path for all my senior existing previous students. But otherwise, don't worry. This has stayed stable for 20 years. Okay? Did that answer your question? I hope. And TradeStation is unfortunately so 20th century technology, Henry. It will not do the things that the automation that NinjaTrader is capable of. I'm sorry, it used to. I was actually a beta tester for TradeStation 25 or so years ago when it was called System Writer. And then when the Japanese bought it from the Cruz brothers, they never did a thing to improve it. It's just not a platform it used to be. Okay? So NinjaTrader is head and shoulders above TradeStation. Okay. I think we've hopefully got most of the questions answered, but I invite you, please, when you get the follow-up email tonight, yes, watch the replay, but also click on the other link that you will get in other emails that lets you schedule time with me. But also, as I am showing you on this slide here, you can write it down, daytradesafe.com/apply now, and that will let you go directly to my scheduler, and you can pick the date and time that works for you. And if you're all ready to join TradeSafe, you don't need to talk to me. That link at the bottom, daytradesafe.com/I-want-in, will take you directly to the order page. So, okay, I understand, Henry. If you're a level 2 trader, in terms of day trading, I know what that means. I used to be trading in prop shops many years ago. So you will want something better than TradeStation. Okay. Visit with me, Henry. And folks, I want to say thank you. I ran extremely over. I've never run this long before, but that just simply means you are that interested. You want to get your questions answered. Please do schedule time with me. daytradesafe.com/apply now, and trade safely, everybody. I hope to see you soon. Bye-bye.